Good. Hello, everyone. Welcome to another episode of the Wall Street Rundown. I'm your co-host Billy. I have Wale with me. What's going on, bro?
I'm good, man. How you doing?
I'm doing good, man. This week has been crazy.
To
So
say
let's
the
do it.
least.
I feel like we're being getting pushed, pulled up and down, sideways, everything. So, quick market recap this week. The U.S. stock market actually rallied, man, and we can kind of tell that's driven by some really good earnings from a couple of companies. The job reports came out today, surprising to a lot of people, even though I'm like, I have my thoughts on that. But and of course, we have China. China is always back on the news again. There seem to be like some talks that's happening, not direct talk yet, but there's some, at least easing with attention when it comes to trading with them and all that stuff. So some of the major index performances, S&P actually gained 1.5% on Friday, closing high. Can you guys believe this is like the ninth consecutive daily gain? It's the longest streak since 2004. That's crazy. 9 days in a row. The Dow Jones was up 1.4%. The NASDAQ also was up 1.5%. Surprisingly, the Russell's up 2.3%, man. Can you believe that? That's crazy. Some of the economic highlights. Again, the April job reports came out today. Said the U.S. economy added 177,000 jobs in April, so surpassing expectations for 130,000. The unemployment rate remains steady at 4.2%. I have my thoughts on that one, but we'll talk about it a little bit. Again, earlier this week, we looked at GDP contraction. The U.S. economy contracted by 3.3% in Q1 of 2025. And that's basically due to like the surge in imports and all that stuff. And yeah, I mean, all of that contribute to the stock market basically going ham this week. You know what I mean? Like we came back, reclaimed all that Liberation Day drop that we had. So Ale, man, let me get your input on this. First, on the situation with the market like being this high, and two, let's talk about the job reports also. Like, I want to get your opinion on that one.
So, as far as the market is concerned, this is a week of good news, bad news. And it seemed like the good news has outweighed the bad news, but I will take everything with a grain of salt and let me go into detail about why. So,
Mm.
for the most part, right, when we look at what drives stocks, it's earnings
Yep.
and um, future earning projections of companies. That's what drives stocks. Headlines affect stocks in the short run. Earnings and future projections affect stocks in the long run. Now, we look at all of the big mega cap name stocks. All of them beat and raised their revenue. I mean, they all beat and on revenue and EPS. So top line, which
Mm-hmm.
is revenue, bottom line, EPS, all beat with the exception of Tesla, which still went up anyway.
Still ran up.
Now, when it comes to guidance and projections, some companies were comfortably able to give good guidance. Microsoft, Meta kind of stuck to what they're projecting. You did see some uneasiness, or should I say, shakiness in names like Apple and
Mm-hmm.
Amazon because their businesses are a little bit more directly affected with tariffs. Apple, of course, because they assemble a lot of their chips, I
In
mean,
China.
their products in China,
Yep.
big issue. They're moving over to India and trying to, diversify their supply chain or almost even completely remove their supply chain out of China.
You're right.
So, with that being said, the stock got smacked pretty hard. But overall, again, you had relatively good projections on the jobs front. So, Thursday, we saw continuing claims move higher, right?
Mm-hmm.
Which meant more people applying for unemployment or more people unemployed. We also saw new claims also move higher.
Yep.
But when that translated over to the jobs report this week, we saw more jobs that were added, and we also saw unemployment remain at
Same.
4.2%.
Yep.
So, a couple things that I will say could possibly have helped the overall job number. We talked about this a couple episodes ago. And again, I want to shout out to my boy Winston Hill. I really feel like the gig economy is helping people earn income without having to claim unemployment right away. I think that
Absolutely.
that is helping in the job labor area. You also have to understand that some of these people who might have got laid off might still be receiving severance packages. So if they're still receiving severance packages, maybe they're not showing up in the unemployment numbers. So
Hmm.
that's another thing that might be helping. So when the number came out today, the market really saw that as a bullish signal. It also probably means that the Fed is not going to be motivated to cut at the next meeting.
Right.
So the way I read all of the collective economic data that we saw is the economy slowing down from a GDP perspective? The answer is yes, mainly because people were saying that people were front loading imports in the first quarter, which is fine. But what I will take away is that most investors and institutions feel that as long as the consumer is still spending and still strong and not losing their jobs, they are willing to buy the dip. That's
Yep.
what this week told me.
Yep.
So I will take that with a grain of salt. Again, we have not seen the full impact of tariffs yet because we're still looking at Q1 2025. We're
Right.
looking backwards in time. So
And plus, we have a 90-day pause also on
we
like
also have a 90-day
major ones.
pause
So
that
all of
came
that.
literally right after Liberation Day.
Yep. Yep. But overall, man, like I'm looking at this number compared to March,
Mm-hmm.
we didn't add a lot of jobs. In March, we had 228,000 jobs was added in March. In April, it was only 177,000. So again, you still have to look at those numbers, even
Correct.
though we still adding those jobs. It's still like I don't even know. I don't even know how did they calculate the average that should be adding this week, this month. Right? I mean, so it's like
Mm-hmm.
the average was 130,000. So how did we get that average? How come we're not comparing it to the
The
March
previous
numbers?
month, the previous month.
Right, you know
Yeah,
what I mean? That
I
would make
agree.
sense, right? It's like why we're not comparing to the previous number. You know, like I don't know where they're getting those averages from,
Mm-hmm.
but for me, that's still concerning too.
It's concerning. You're right. Like I take to me, and again, shout out to how you're looking at this. Everyone's like, okay, the economy is slowing. Here's what we're expecting.
Mm-hmm.
Rather than looking at it, where were we in March and where are we now? Because again, 235,000 jobs in March. No, was that yes, in March.
Yep.
177 in April. That's a
Right.
big contraction month over month.
Right.
So again, I will say this, is the economy slowing down? The answer to that question is yes. But is it slowing down to the point where people feel nervous about buying? At this moment, the answer to that is no.
Right.
And we'll have to see what the Fed has to say on May 7th about all of what they're seeing. But I say this, the Fed's going to be like, we don't have no incentive to cut. We're probably going to hold rates higher for longer. And I've been saying this for a while. I don't think we're going to get any cuts this year unless it's the Fed stepping in because things are getting ugly. That's the only way we're getting a cut this year. That's my opinion.
Right. Especially if we're celebrating these job numbers, I don't think the Fed have any incentive to cut any rates.
Nope.
You know,
Nope.
like they're like, hey, it looks good. So there's no point.
Nope.
There's no point. There's no point of cutting jobs and all this stuff. So
No.
again, it's like what we're seeing in terms of numbers, like you really have to look backwards. Otherwise, you will be like in this limbo thinking about, oh, the economy is doing good, the market is doing good, right? I've also seen a report that a lot of wealthy people are actually spending a lot more than the non-wealthy people. You
Mm.
know what I mean? So again, that's another offset too. It's like, we have people who are super wealthy who are actually spending money right now and going out there and buy stuff. So
Mm-hmm.
is that does that have a factor in the market also?
Another thing I'll say is this, the consumer spending number, I keep saying this, take that with a grain of salt because
Mm-hmm.
a lot of what is fueling spending is debt.
Yep.
A lot of people are using credit to make purchases. And if you look at the savings rate and the revolving credit balances out there that are being reported, they are growing. So the
Mm-hmm.
question is, at what point does what's the straw that's going to break the camel's back,
Right.
so to speak?
Right.
We don't know that per se. So I will say this, as a trader, you have your opinions about, what you're expecting, but if you see the market moving in a direction, just follow the money. That's pretty much what, we need to do as traders, is not let our personal opinions or emotions judge how we trade.
Right,
So,
right.
yeah. But as an investor, you want to be cautious. And then you also want to tell yourself, if there is a pullback, we don't know the magnitude, but I want to be ready to deploy capital into the markets,
Absolutely.
into areas where I feel comfortable doing that, because we've been saying this since March.
Yeah, yeah, yeah.
If you've been dollar cost averaging since March, oh, you in a good place.
Oh yeah. Oh yeah.
You in a good place.
Oh yeah. And if you increase that contribution that you had on your 401k, trust me, you're in a good
You're in
place
a
right
good
now.
place. You in a good
Yes.
place. Yeah.
Like, and, it's just, I guess it's the mental game that comes with the stock market, right? You really mentally have to be strong. Otherwise, you'll be selling when you're not supposed to selling and buying when you're not supposed to buying. You know what I mean? So it's like you're
Yep.
gonna have those gyrations. You really have to be mentally strong and understand like the market cycles and all this stuff.
Yep.
Even with all this craziness happening right now, the fundamental way of how the market works is still the same. Buy low, sell high. Like it's still the same.
It's still the same. The rules to the game haven't changed.
It doesn't
The only
change.
thing that changes is your strategy within those rules.
Yep.
That's
Yep.
it.
Things
That's it.
don't change. We drop, you buy. You know what I mean? When we go up high, you might think about taking some profit and and chilling for a little bit.
Mm-hmm.
But I heard you talk about a little bit about the debts. So in the first quarter of 2025, it says the average credit card debt among those carrying balances was $7,321.
Mm-hmm.
This represents a 5.8 increase from the previous year.
Mm-hmm.
And total consumer debt, including credit cards, auto loans, and student loans, have reached $18.36 trillion in the fourth quarter of 2024.
Sheesh.
So you combine all of these, that's how much debt. And this is the average consumer. I'm not talking about like the government. This is credit card debts, auto loan debts, and student loan debts. $18.036 trillion.
That's wild.
And what did Doge just save us? $160 billion. They didn't even put a drop in the bucket in all the stuff they're talking about.
I don't
You
even know if
know?
I trust those Doge numbers, to be honest with you.
They're making it up. They're
If
making
I'm
it
being
up.
100%, I don't
I'm
know if
like,
I
I want
trust
to
those.
see those. I want to see where those money is. But most of the cut they're doing right now is just cutting programs, right? And just take it like, hey, here's a potential what could have went in this program. We're gonna take that as a savings. You know what I mean? It's like,
Mm-hmm. Mm-hmm. Yeah, I
yeah,
agree.
yeah. We're
I
not really
agree.
seeing
The
anything.
one the one thing that I and this is so funny. The one thing that I did not see, I saw that Trump was proposing a potential budget for to Congress, and the one area they don't want to cut spending is defense.
Yeah.
And I'm like, that's the area where you're probably wasting the most money. Like, no one knows where the money is going
Yep.
with the Pentagon. Like, no one knows. I mean, they failed multiple audits, but you want to give them more money? Whew.
Man, you know where that money is going. First of all, first of all, the,
don't get me started.
the Department of Defense is just it's a fancy name for the Department of War. If you guys go back in like the day, that department literally used to be called the Ministry of War, right? That's what it was called. But somebody said, like, hey, that's not good marketing. Ain't nobody want to support it and say Ministry of War. So let's change it to Ministry of Defense. Defense sounds good, right? Because everything we do, we try to defend ourselves. So let's think about it. The objective hasn't changed, the name changed, but everything's still the same. But if you guys really want a good movie to watch, I forgot what that movie is. I think it's like
Is it called War Dogs?
War Dogs. If you really want a good movie about where the defense
Money or how it's spent, the process. Yeah,
go
watch
watch that movie. It gives you a little bit of glimpse about those multi-million, multi-billion-dollar contracts that anybody can get. If you have a company and you're able to show legitimate that you can deliver certain things to certain places or to provide certain things to certain places, certain people, you will get a contract. They will give you the money and you have to basically deliver. You know what I mean? Go watch that movie. You're gonna learn a couple of things here and there. But overall, like the debt is not coming down.
Nope.
Consumers still spending. And I feel like we've been talking about this since last year, 2024, that as long as people still spending, this economy or this thing is still gonna keep chugging. The minute we stop spending, then we can start seeing some some really really crazy numbers.
Mhm.
So
And the funny thing is that you hear a lot of these analysts and institutions, they're not taking off recession off the board yet. Like
no,
there are people that
mm-mm.
are optimistic, but they're not taking the word recession off the board. Now, and I also want to say this, all recessions are not built the same. So
Right,
when people think of the word recession, they're thinking 08, 09. It may not get that bad.
right.
It could be a couple months,
Mm-hmm.
could be one quarter. So when you think recession, don't always think catastrophic. Oh my God, the sky is falling. Just think slow down, prices are lower, people aren't spending until there's more optimism in the market. Because
Yep,
again, remember during COVID, that was a recession,
yep,
but
yep.
it was a short lived recession because the Fed stepped in and printed all that money.
Mm-hmm.
So, again, when you think recession and you hear that word, don't think 08, 09. That was a global financial crisis.
Yep,
A
yep.
slowdown can lead to a recession, but it may not always lead to a crisis. So just
You,
keep
you
that in
you know
mind.
you know one person that says there's no recession.
Who?
Kramer.
Oh, yeah, he did. I saw that.
Jim said
I
there's no
saw
recession.
that.
Take recession of the books. I don't know, dude.
Dang, I don't know about that, man. I don't know about that.
The inverse
That's a
Kramer.
that's a, that's a bold statement,
Listen, and the,
especially
the inverse Kramer. I don't know, man. We see how it's gonna turn out on this one.
especially for somebody who, when Lehman Brothers was going out of business, was like, "Don't get out of Lehman Brothers,"
Mm-hmm.
and those boys went bankrupt.
Yep,
It's
yep.
crazy. Kramer has had a 20-year career for being wrong most of the time. That's so funny.
Man. And he has a huge group too. Like his club, whatever investment club, is
Oh, the
very big.
investment club, yeah, yeah.
Yeah. So he's most of his money he makes it out of his investment club, right?
That's crazy.
But the man is, I don't know, man. I don't know. But Kramer is another guy you guys can talk about. He's a showman. He is definitely a showman. Moving on. So Amazon. Let's talk about your Amazon trade, bro. I want to talk about that one because you crawl out of that one. Because when I saw your screenshot, I was like, God, how you coming back from this? And then hey, you come out with like 1%, and you're like, I'm out.
So this. Let me just tell a quick story. This is anytime you go into a trade, right? Before you buy one contract, have a freaking plan.
Mm-hmm.
You have to have a plan because what you think might happen may not happen. And how you react to that can be the difference between losing and winning. So,
Yep.
Amazon, I saw a big trade yesterday going into earnings where someone bought a bullish call spread with about $2.3 million. So they were bullish on the stock after earnings.
Mm-hmm.
They had a longer expiration. I think the expiration was probably going until about June, but it was a big order. And when I saw it, I was like, you know what? Let me trade it as a YOLO trade. YOLO trade basically means you put the money in. If you lose it, you lose it. And if you
Yep.
if you win, you win. It's a 50-50. I don't care what happens type trade. I go in, make my trade. Nothing crazy, something I'm comfortable losing. The report was good. But
Mm-hmm.
I guess people were saying that the Amazon Web Services number, the revenue growth was not what they expected. Whatever.
Mm-hmm.
Stock trades down. So I was up going into earnings at the end of close. I was up maybe about 15, 16%. Stock opened today. It was green, but when it opened, I was down like 89%.
Yeah.
So I had basically almost lost my entire capital. Now, I was looking at a level of support when I was trading. And I said, okay, Amazon is trading near a level of support that might give me an opportunity to average down. So basically, what that means is continue to buy contracts at a level where it might come back. So I looked at that level and it was somewhere between, I think, like 180, 187 and some change. And I said, if Amazon trades to that level and finds support, I will buy into Amazon. So I averaged down. So I brought the cost of my trade down tremendously. Amazon bounced to that level of support. It went from 186, 186.65-ish all the way to about 192.
Yep.
So that comeback got me out of that trade pretty much at break even. But the only reason why I was able to get out of that trade is because I had a plan.
Hmm.
I had a plan, and the contracts that I bought weren't going to expire until next week. So
So
I also
you had
had
time.
time on my side.
Yep.
So for me as a trader, I personally don't always take a lot of risk. I'm kind of like middle of the road when it comes to risk, which is another reason why sometimes my returns are not super absorbent because the risk I take is not a lot. And I will tell
Right.
people this: when you're trading, the returns you get are directly correlated to how much risk you take. It's not about how good you are. It's not about how accurate the trade is. It is directly correlated to the
Yep.
amount of risk you take.
Absolutely.
So someone can be in a trade with the same outcome, right? But the person who took the most risk will profit more than the person who
More.
took less risk.
Yep.
So let's just say Amazon's trading at 190, it moves to 195. Someone who bought a 195 call is going to profit more than someone who bought like a 190 or a 189 call.
Mm-hmm.
Still a profitable trade. But if you take more
More
risk,
risk.
you are rewarded more.
Yep.
Personally, I don't like to take risks. A lot of risk. I take risk, but not a lot of risk because I like to tell myself if something goes wrong or something goes against me, I want the ability to be able to have a plan B or plan C when it comes to my trading strategy.
Yep. Yep.
So, and I don't technically look at percentages when I look at my trades, I look at dollar figures
Mm-hmm.
because I'll tell people this: percentages don't pay bills, dollar figures do.
Yeah.
So,
That's a fact. That
yeah,
is a
dollar
fact.
dollar figures do. So this is what I always tell people: you are a trader, you put in $100, right? Your trade is now up 100%.
You
Do
made
you want to be a trader
$100.
that puts in $100 and makes 100%? Or would you rather be a trader that puts in $10,000 and makes 30%? You tell me.
Mhm.
So again, your returns are directly correlated to your risk.
The amount of risk. Yep.
So always, everything is relative. Everything is relative. So
That is a bar right there because again, you can like you said, you can be in the same trade. We both can make 1,000%. But if you can make 1,000% on $100, you just made a good $1,000, right? Or I can make $100,000 on a $10,000 trade. We're in the same exact trade. You know what I mean? So again, it just depends on, like you said, like your amount of risk and what you're willing to put. And
and
a
and
lot
what
of
you're comfortable with.
yeah, and a lot of times, like yeah, you're right. If you put in $10,000, you can probably get out of the trade earlier, right? Because in $10,000, you made 50% of that's $5,000. You're out. Somebody who's putting in $500, if they make 50% on that one,
They
it's
might be
200.
enticed to stay in it longer.
Yeah, they were like, 250 is not a lot, Like I want to make 1,000. I want to make like 500. So it's like your mentality is shift a little bit more. It's like $10,000, 50% of that, that's $5,000. You done for the day. Like people don't even make that in a week. You know what I mean?
Yeah.
So yeah, definitely
Every,
like the
every
sizing is definitely matters.
everything is relative because again, like just imagine, how should I put it? Imagine a trader, right? Like I'm imagine a trader that gets out of every trade that they make when they get out at, let's just say 15 or 20%. Let's just say that's their strategy.
Mm-hmm.
And people are like, oh, he's not really making money. He's not. But if those trades are like 200,000 or
Mm-hmm.
100,000 per trade, that 10 or 20% is lovely.
They're making some good money. They're making some good money. They're putting that $200,000 to work.
So you can always put in more capital and get out at lower
Yep.
percentages.
Yep.
Or if you want to, you put in a little capital and you try to chase the higher percentages.
Yep.
So everything is relative to how much you're willing to risk,
Absolutely.
your mentality, and the parameters that you set across your trading strategy.
Absolutely.
All of it is relative. All
Yeah.
of it is relative. Because I know someone that trades, they typically like to take out their percentages or they exit their trades at about 10 to 15% per trade.
Mm-hmm.
But a full trade for them, like when they're fully committed to a trade, it's like 100 grand.
Yeah.
That's because they're trading with a very large portfolio.
Yep.
So am I going to sit there and knock somebody because, okay, I made 50% or 60% on my trade and they're only making 10%? Because at the end of the day, it's about the dollar figure. How much money are you
Yeah.
actually pocketing?
Yeah. Yeah.
So
Absolutely.
yeah, this
Abs-
person, they trade sometimes they trade futures, but a
mm,
lot of times it's kind of like they get out 10-15% is when they start taking profits because the trade sizes that they
it's
like to trade
huge.
are huge.
Yep.
So,
And that might help somebody out there too. Like I think there's a lot of people out there who might like, you might put $1,000 in
mhm,
and you wanted to turn to 5,000. That means you want to go up to 500%.
mhm.
You're not gonna get those numbers a lot of time. If you're gonna get those numbers, you really have to be very, very particular, and you have to trade around catalysts, so news or something like that, right? If you really want to get those crazy numbers, but
Yep.
on a day-to-day basis, if I have 1,000 and you have 100,000, you hit 50% on your 100,000. That's 50 grand. You hit 50,000. I hit 50% on my $1,000. That's $500. We're not the same. You know what I mean?
That's why I
You
tell
walking
people
away happy. I'm like, I gotta get back in here again tomorrow and try to figure this out.
that's why I tell people every as a trader, everything is relative.
Yes.
Everything is relative.
Yes.
Like this person that I'm talking about, like their trading strategy, they're looking at maybe 1 to 2 trades a week.
Yeah.
They sit most of the time they just sitting on their hands,
Yeah.
just sitting on their hands,
Yep.
you know. And it's the same trader that made $71,000 this
Listen,
week on
I
IWM.
figure you'll talk about the same person. But
They
that's such a good. I mean, I almost feel like you also have to cut when you reach to that place. Like you have to have a different mindset too.
correct.
You know
Yes.
what I mean? You can't trade with the same mindset when you were trading. You have $100, $200. You can even trade with the same mindset. You have $10,000. You almost have to get to a different mindset, right? If there's no trade, you don't force any trades.
Nope.
You know what I mean? You sit on your hand and just chill until you see a good trade. And this person probably trade similar certain setups all the
Mm-hmm.
time. They don't deviate from that. So yeah,
Yeah, they trade the same. They trade the same setups, and they're very meticulous about what they trade.
yeah,
So again, I am a big believer in the more quality, less quantity. Because again, as I
yes,
always tell people, the more you trade, the more you kind of revert back to the average. But at the
mm-hmm,
same time, again, if you're consistent
mm-hmm,
and you're more right than wrong, and you're very meticulous about where you enter and what how you make your trades, you know, you're not gonna you stay in the game a lot longer.
a lot longer.
You'll stay in the game a lot longer. Like for me, again, I like to be a more of an in the money, longer expiration type trader.
Yep, yep,
Rarely do I do short term, you know, 0 day expirations. Do I do it sometimes if I'm scalping? Yes. If
yep,
I
yep,
know mentally I want to get in and out of here ASAP,
yep,
yes.
yep,
But I know from a skill set mindset, I am not the best day trader. I am better at swing trading
yep,
and trading setups that are developing rather than setups that are kind of like happening live.
yep,
So
yep.
I know my limitations. I try to stick to what I can. Am I adaptable? Yes. But again, I'm very honest with my approach when it comes to trading.
Yeah. And I think also on top of that, I say this all the time, is like you have to stay off of other people's ports. Stay off other people's ports. You know what I mean? Because people will post their gains more than they post their losses, honestly. And if you like seeing somebody's ports always posting 1,000% here, 1,000%, you never know what they have to go through to get to that point. So stay off other people's port, focus on your port, focus on your developing your own strategy, because you have a different mindset than anybody else. You have a different, settings. Your environment is different. Your bank account is different. Your trading account is different. So it's like you cannot be trading based on somebody else's mentality. But
And you also I always tell people this. You also have to set your own personal parameters around risk.
Yep.
No one should be setting your risk parameters for you. You need to set those guardrails on your own based on your own personal situation.
Facts.
That's a big thing. And I probably use this analogy a million times, kind of like driving a car. You know, whoever taught you how to drive a car, right? They gave you all the steps that you need to be successful in driving. You don't call that person every day and be like, should I be doing 80 on the freeway or
Right.
should I be doing 85 on the freeway? Should I be doing
You should
90
you
on the
should know
freeway?
that already.
You tell yourself based on the conditions that are on the freeway, based on my own driving skill set, based on my car and what I'm comfortable with, I am
Mhm.
going to dictate the speed that I'm going to drive.
Yep.
You should have that same mentality when it comes to how you go about setting risk parameters in your trading strategy. Has to be
Facts.
personal. Has to be personal.
Facts. Facts. Facts.
So,
Man, we can do a whole lesson on trading
trading
mentality,
psychology.
psychology, all that stuff. Because if you can nail that down, man, you gonna have a hard time. You have to nail that down. And
Yeah.
unfortunately, it's one of those things like you have to experience it. We can't teach you. We can
Yeah. It takes
give you a
time.
list of how you're supposed to feel and what you're supposed to do,
It takes
but
time.
yeah,
Yeah.
until you in that moment doing that thing or pulling that trigger to trade that trade, you're never gonna be able to experience this feeling. You know what I mean?
Yep.
So one thing I wanted to talk about also is it looks like the SEC is trying to get some of the Chinese company be delisted from the U.S. Stock market. Now, some of the lawmakers, I'm sorry, are trying to get SEC to delist some of those. But so I don't know if that's a good. I don't think that's a good I guess move from my perspectives because now you literally removing billions of dollars off of the stock market if you do that, right? And some of those companies like Alibaba, that's a great company. I mean, they ran into some crazy stuff, in this whole war with China. It's not really helping, but trying to remove a slew of list of Chinese companies from the stock market, it's not a good move in my opinion. What do you think about that?
Yeah, I think the timing is a little bit so the time is not good
Suspect.
because if you're trying to negotiate a trade agreement with another country, right?
Yeah,
There's tension between the two of you. Telling them that they need to delist some of their bigger billion-dollar companies off of your exchange, I don't think that helps that conversation. I
right.
don't think it does. Um, let's keep in mind that Alibaba has been trading on US stock exchanges for what, more than 10 years now,
Yeah,
possibly?
yeah.
Um, so to now think that they're a threat, again, I don't know what type of information they're using to decide that, but I just don't think the timing is good because there are a
Mm-hmm.
lot of Chinese companies that trade on US exchanges. You've got Alibaba, you got PDD, you got JD, you've got
Neo,
LI, you've got
Xpeng, all of
Neo.
those.
You got a lot of these companies that are trading on US exchanges. I don't know what China's response will be to that while they're trying to negotiate, because based on what the conversations are on the news outlets, it sounds like China is willing to have discussions
Conversations. Yep.
and have conversations about how they can come to an agreement regarding this whole trade thing. But I am very, very wary about the timing of this conversation about let's delist.
Yep.
Because if China says, okay, well, if you're going to do that, then they might bring down what they're willing to do when it comes to the trade
Mhm.
agreement. So we'll see how this plays out, but I don't like that at all.
Yeah. I'm very suspicious because it was introduced by lawmakers. I'm very suspicious.
Mm-hmm.
Like we should be
Mm-hmm.
talking about them not trading. And I think it's a distraction. In my opinion, I think it's a distraction from the conversation that was trying to get picked up last week about potentially having some lawmakers not be trading and stuff. So I think it's definitely a distraction. They're trying to shift the narrative a little bit over. So yeah, we shall see, man. So let's talk about next week, FOMC and all that stuff. Let me get your opinion on that, man. One, what do you think Jerome is going to talk about? And two, what do you think the market is possibly going to react to, if whatever scenario that you're going to mention, like what exactly they're going to how the market is going to react to it.
So here is my opinion. Obviously, they're not going to cut rates. I think everybody can agree to that, right? Two things Jerome has to talk about. One, how does he feel about the negative GDP print that came out this week? His response to that, I'll be very, very in tuned to what he says. Is it something to be cautious about? Is it a big deal? Um, what is the committee's opinion on that number? Because they projected it, right? They thought it was going to be in the -1% range.
Mm-hmm.
It was not. Obviously, we're going to get another revision. I think we said May 29th. His answer to that question, I'll be very, very interested in. Number two, the jobs report. I know he's going to say something about that the labor market is strong. We
Yeah.
feel good about where the labor market is, blah, blah, blah. Based on that, that is going to help justify, in my opinion, their reason for not cutting. Then the third thing that I have to talk about that he's probably going to have to address is the committee seeing anything in the data that is showing that the tariff policy is weighing on the consumer or weighing on the economy?
Mm-hmm.
I will assume that they're going to say we don't know because, again, they're probably going to be looking at April data, March data, and all of the stuff that came in up until probably, I'd say, the end of April, right? So his response to that will be very, very interesting. Now, we both talked about that we were still seeing large put orders
On
going
SPY.
into next week on SPY.
Yep.
So I don't know what that means, but it could be an omen that tells us that there are still some people that think that that could be a catalyst for a move to the downside. And
Yep.
if I am not mistaken, the area I was looking at on the VIX to see if it finds support, I'm looking somewhere between 22.15 to about 21.50 to see if it wicks off of that level.
Yep.
If it holds support at that level, I would be very cautious about what could happen with the FOMC news on the
Yep.
7th. So I don't want to make any predictions, but I want to say that my sentiment and based on the trading on SPY that I've seen is that there are some people that are not necessarily convinced that this rally will continue. So we'll just have to wait and see. But that's going to be a big it's going to be a big catalyst
Yep.
on the 7th, in my opinion.
Yep. Yep. I won't be surprised if you see the VIX go back to like 21, maybe around 20 area by next week, early next
Hmm.
week. And then we're probably gonna see a reversal from there.
Yeah.
I'm just looking at because we like it's gonna go into that. There is a bullish fair value gap right around $20.
Okay.
So we shall see, man. We wicked after that on wick after that off of that same bullish value gap on April 2nd, and we've seen a crazy rally from there. So I think we're gonna probably retrace back there again, and we shall see, man.
Yeah, let me look at one more thing real quick, if I'm not mistaken. Okay, so on a technical basis, these are levels on SPY and QQQ, I'll say that I'm looking at. Um, we got rejected at 490.45, that area today on QQQ.
Yep.
Keep in mind that that is the same area we got rejected before Liberation Day
Mm-hmm.
on the weekly chart. So we spot QQQ needs to breach 490.45
Yep.
for this rally to continue. So that's a level I will be watching to see, does it become resistance or do we start to blast through that?
Yep.
On
Yep.
SPY, I've got 576 as a potential level we could run into before we start seeing. Actually, let me say, I'd say between 575 and between 576, that area potentially we could run back in.
Yep. Again,
Um,
there's a bearish value gap on that too. So yep,
so
that's
be
exactly what I'm talking about.
mindful of that. Now we are above the 200-day EMA on SPY, just closed
Mm-hmm.
above that. for the first time since March
March.
25th.
Yep. But you see what happened. You see what happened after that.
Yeah,
On
when we got to
March.
the SMA, when we got to the I mean the 200 SMA, we got rejected
Yep.
pretty hard. And then on QQQ, we are right at the 200 SMA,
Mm-hmm.
right there. So on a technical basis, we are still in an area of caution, in my opinion. But at least this week, I'm telling you, the buy the dip folks was really buying the dip.
They came strong. They came really strong.
So it's just a matter of, does the momentum start to fade, or do we continue to rally into next week? Now, you can also say this as well, which is another thing that could potentially happen is, we could sell off after FOMC and the body that people come right back.
I was gonna say the same exact thing because
you,
what happened with GDP? When GDP came, we dropped and then we closed the day in the green, which
yep,
is crazy.
which
Like
is crazy.
we swung like 180 going back upstairs. So it's like,
Yeah.
yeah.
And then, I'm not talking about like a small drop. I'm talking about a drop. Anytime you see a drop below 2% and recover the same day, you gotta be, that's crazy. That's not an everyday phenomenon.
No, that's
That
some
that isn't that's
crazy institutional buyers came in like
exactly.
crazy.
And another thing that I will say too is, look at how the stock market finished today. And Apple was pretty much red all day. I mean, it
Yep.
was red all day,
Yep.
about 4% red,
Mm-hmm.
but the market continued to rally.
Yep.
So we'll have to wait and see. I'm in the optimistically cautious camp right now until we
Mm-hmm.
get past FOMC. Once we get past FOMC, I think I will have a better idea of what to expect.
Yep.
Nvidia doesn't report until the end of the month, so that you can kind
Right.
of like table that conversation to another day. And I also want to talk about Tesla because you brought it up this weekend. You can kind of see that Tesla is getting rejected at that 200
Yep.
EMA SMA level. Still not above that. So, but if it does break above that, again, this is a stock that could easily get back to the 300s pretty soon. So yeah, we'll just have to wait and see. But
Yeah.
FOMC, that's going to be a big event this week.
Yep. So I think keeping an eye on the FOMC going into FOMC, I'll be kind of curious to see how the market reacts on that same day once Powell start talking and all this stuff. So
Mhm.
we shall see, man. This crazy puts that we see on the spy, I'm keeping an eye on it. Just to see, if they keep average because this is the third day in a row they're still buying it.
Mhm.
So
Mhm.
that's gonna be interesting to see.
Yep.
But yeah, man. So going into next week, I know you give a little bit of advice, but anything to watch out for was outside the FOMC because I think we have the initial jobless claims that's on May
Every
8th.
every Thursday. Yep.
Yeah, but there's nothing really. There's a trade balance on May 6th, which is the US trade deficit data for March, and
Mhm.
then productivity and cost data also, but I don't see anything else that's major beside the FOMC.
Yeah, nothing major. Now I will say this though. Give me one quick second. Um, Despite today's rally, bond yields on the long end of the curve went up.
That's another one we didn't talk about.
So I'm looking at the 20-year. Bond yields actually went up. Okay.
Hmm.
Let me look at the dollar index. Okay. Bond yields up, dollar index down.
Hmm.
It's not always something you see every day.
Yep. The 10-year
Now,
closed at 4.33%. The 2-year closed at 3.83%. The 30-year closed at 4.7%. That's a crazy uptick, yo.
oh, the wait, you said the 30 went to 4.7?
0.79. Yo.
Let me I didn't know it went that high today. Give me one quick second. Let me find my chart. This is German. Okay. Yeah. So the 10-year went up, the 20-year went up, and the 30-year went up on a day where the market rallied. So
So,
again, optimistically cautious.
some like who keeps saying this? Some fish is happening. We don't know what it is, but something is
Optimistically
happening.
cautious.
Yep,
Optimistically cautious.
yep,
So,
yep, yep. And just to give you guys some numbers, the reason why I say it went up like crazy is because if you go back to the last day of the month, April 30th,
mhm.
the 30-year was at 4.66. And today we close at 4.79. So it's going up. The last time we closed at 4.79 was back on April 15th. And then I think we reached like a high of like 4.85 or 86 on April 10th. And you see how April was. The whole month of April almost like red until like the last week.
Yep. All right. So let me just pull up a yield curve chart real quick. Yeah. So the 10-year, a 9 basis point move in one day
One day.
in the treasury market is something that you have to pay attention to. You cannot ignore it.
Mm-hmm.
Um, where is the yield curve? Okay. So the 30-year higher than where we were not too long ago.
It's creeping up.
And
It's creeping up back to like that 4.86 again.
yep, the 10-year. Yeah, so the 10 years also moving higher a little bit. So I always tell people look at the bond market as well. Don't just look at the stock market. So that information to me tells me that we need to be cautious going into the March 7th meeting with the Fed.
Yep.
So
Yep. That's gonna be interesting, man. So again, you couple that with the spy puts and all that stuff. Yeah. I
yeah,
guess we'll talk about it on Wednesday when we see the numbers.
yep.
So all right, man. With that being said, I think we are done for the day. And Wale, anything else you want to tell the people outside of
So
what we talked to them?
one tip that I will give is as investors, right? If you are an investor that is, how should I put it? Um, you're an indexed investor, right? You don't like to pick stocks, you just like to own the index. And
Mm-hmm.
you own like SPY and QQQ and all that stuff. SPY is one of the indexes that gets a lot of the headlines, that tracks the S&P 500, and it's relatively cheap. But VOO by Vanguard does the
Mm-hmm.
same thing, but is cheaper from an expense ratio standpoint. It's not a big difference. I think SPY charges like 9 basis points, but VOO is 3 basis points. So over a long period of time, that adds up. So if you're somebody who just wants to buy an index and you've been buying SPY, right? And SPY is kind of like your go-to index to buy.
Yep.
In my opinion, VOO is a cheaper option that does the same exact thing. Does the same exact thing. And if you're someone who buys QQQ, but you want more tech exposure because the NASDAQ 100 is heavily tech weighted, but everything in there is not tech. So
Mm-hmm.
if you're someone who buys QQQ and you want to be mostly um, exposed to technology, to me, a better, cheaper option is BGT from Vanguard.
BGT.
BGT. And BGT has actually outperformed QQQ over a 5-year time frame by a pretty wide margin.
Oh yeah.
Yeah. So if you're a SPY investor, in my opinion, VOO is a better option and cheaper. If you're a QQQ investor, BGT is a more, it has a little bit more risk. Don't get me wrong. It has more risk because it's heavily weighted towards information technology,
Yeah.
but it does what QQQ does, cheaper, and it's more magnified. So that's my tip if you are an indexed investor. Save you a
There
couple basis points on fees.
you have it.
Yep.
There you have it. All right, y'all. With that being said, it was a pleasure. We'll talk to you guys on Wednesday. Y'all have a good weekend. And yeah, we'll catch back